The Fed's not going to let the default happen. The only question is, what is the trigger? When is the next financial crisis going to happen? And I guarantee you that within days, possibly even hours, you saw what happened in 2020, financial crisis, lockdowns, and then bam, like that day, they printed up like $500 billion in the repo market, and all of a sudden the money supply started to just go vertical. It's going to happen again this time, but even more extreme. And it's going to be sometime in the middle of the night, and there's not even going to be a press conference about it.
Welcome to Silver News Daily, your ultimate destination for all things precious metals. If you're passionate about the glimmer of silver and the world of precious metals, you're in the right place. By hitting that magical subscribe button, you're joining a community of like-minded thinkers who see the potential of silver and precious metals shaping the future. Buckle up, because we're diving headfirst into the latest news and updates. Hey there, fellow precious metal enthusiast. It's always a pleasure to connect with someone who shares a passion for the value and history of commodities like gold and silver. So I've got some fresh insights for you from the market, and I thought it'd be great to catch up on the latest developments. Gold, the yellow metal we all adore, experienced a minor pullback recently. Today, it's trading at $10 less than $1,910. Interestingly, this decrease happened even though the US dollar and 10-year Treasury yields weakened. And you might be wondering why? Well, the answer lies in the recent US inflation data. The data reinforced the belief that the Federal Reserve might hit the pause button on increasing rates soon. Inflation is a hot topic these days, and it's influencing many decisions in the financial markets. Now, don't be too alarmed by this retreat. We've seen gold's value momentarily peak at $1,913 earlier. These fluctuations are pretty common, especially in today's volatile environment. But here's a fascinating twist. The underlying inflation's annual rise was the tiniest we've seen in nearly 2 years. That's an indication suggesting that the Fed might actually pause their rate hikes. But on the other side of the coin, August witnessed the steepest rise in US consumer prices in over a year. The primary culprit? Soaring gasoline prices. So with all these numbers and shifts, you might ask, where's the future of gold headed? The uncertainty mainly revolves around the Fed's rate trajectory for 2024. This, my friend, is a significant factor contributing to the ups and downs we're seeing in gold's price. But you know what? Uncertainty can also spell opportunity for those with an evil eye on the market. Hang tight as we dive deeper into the dynamics of the market and what influences the ebb and flow of our beloved gold. I promise you, it's a roller coaster, but remember, every dip can be a chance to soar even higher. Continuing on our journey through the gold markets, let's talk about supply and demand, the heart and soul of any commodity's price. Remember the SPDR Gold Trust? It's the world's largest gold-backed exchange-traded fund. Recent reports showed a slight decline of 0.3% in holdings, tallying at 882 tons. Now, while that might seem like waning demand for our treasured metal, it's crucial to take a broader perspective. On the backdrop of this, there's another player influencing gold's price, the mighty US dollar. A stronger dollar can make gold relatively pricier for investors holding other currencies. Now, the recent inflation data has somewhat fortified the US dollar, yet the Federal Open Market Committee seems to be leaning towards keeping rates steady, which can provide a temporary cushion for gold. It's always this delicate dance between gold and the dollar, a thrilling spectacle to witness. One fascinating tool that many seasoned investors rely on is the CME FedWatch tool. Currently, it's showing a 60% likelihood of the Fed maintaining their interest rates in the upcoming meeting. And there's even talk of another pause in November. So why does this matter for gold? Well, higher interest rates can push yields on US Treasury bonds, pulling investors away from non-interest-bearing assets like our beloved gold. As a result, investors are now shifting their worries from inflation to the opportunity cost of holding gold in this possible rising rate environment. It's intriguing how the winds of the financial market can shift, right? But this is what makes gold and silver investments so exhilarating. There's never a dull moment. By understanding these nuances, we can better navigate these tides and possibly turn uncertainties into opportunities. Stay tuned, because up next, we've got some spicy forecast and technical analyses on gold that you won't want to miss. Trust me, it's going to be illuminating. All right, let's delve a bit deeper, shall we? Whenever we discuss the markets, especially something as prized as gold, there's always that anticipation about what the future holds. Let's decode that. Firstly, eyes are glued to the upcoming US data releases. Everyone's eager to see the August producer prices and retail sales data. And if that wasn't enough, there's an added layer of excitement with the European Central Bank's rate hike decision. All of this suspense is building up to the grand finale, the Fed's policy decision on September 20. This feels like a blockbuster movie unfolding, doesn't it? With the US dollar gaining some muscle and the looming possibility of a Fed rate pause, gold prices might face a bit of turbulence in the near term. Alright, fellow investor, are you ready to geek out a bit on some technical analysis? Spot gold, or XAU/USD for those of us in the know, is currently hovering just below $1,909. While there isn't much deviation from the average of the last 204-hour periods, which sits around $1,922, the metal is slightly below the 54-hour average, which stands a bit higher at about the same price level. This, my friend, hints at a somewhat bearish sentiment. But wait, before you raise an eyebrow, consider this. The 14-4-hour Relative Strength Index, RSI, sits at 35.56. This indicates a weakening momentum, but the good news is it's not in the extreme oversold territory. As for support and resistance, the battle lines are drawn between $1,886 to $1,894 on the support side, and between $1,947 to $1,955 for resistance. With the short-term trends indicating a possible weakness, it's crucial to keep an eye out and be agile. After all, in the world of gold, fortunes can turn on a dime, and sometimes the bearish clouds might just have a silver lining. I've got more insights up my sleeve, and the next part is just as riveting. Stay with me, you won't want to miss it. Have you ever heard about the pulse of the market? It's where things really start to heat up. Futures markets are a bit like crystal balls. They give traders and investors a glimpse into potential future price movements. So let's peer into this crystal ball together and see what the gold futures markets are hinting at. There's been a bit of hustle and bustle around the gold futures markets recently. For the third session in a row, open interest rose. This time it's increased by 873 contracts. Now, for those unfamiliar, open interest represents the total number of outstanding contracts. It can be a useful indicator of the market's liquidity and general activity. A rising open interest in some cases can signify that new money is flowing into the market, which is always an intriguing development. However, let's not put all our golden eggs in one basket. Volume, which represents the number of contracts traded, contracted by almost 3,000. This sort of diverging movement between volume and open interest can often lead to fascinating market dynamics. Specifically, amidst all these developments, gold prices took a little dip on Wednesday, and it seems the reason behind this slide is the modest increase in open interest, hinting that there might be a few more bumps on the road ahead. But here's a fun twist. The magic number right now seems to be $1,900 per troy ounce. Why, you ask? It's emerging as a pivotal contention area. It's like the big boss level in a video game, a number that might test the mettle of many investors. So as we look forward, that's a number to keep our eyes on. Gold's journey is always filled with twists and turns, ups and downs, but that's what makes it so thrilling. Being prepared, staying informed, and having a clear strategy can turn this roller coaster ride into a rewarding adventure. Alright, my gold enthusiast friend, we're approaching the final stretch. Stick around as we tie up all the threads and glean some more insights from the fascinating world of gold and silver. Alright, so after our dive into the futures, let's touch on something that often leaves investors scratching their heads: the broader market sentiments and technicalities. Because let's face it, understanding the heartbeats of the market can sometimes be the difference between striking gold and hitting rock. So what's the current vibe in the gold market? Well, as our trusty intel indicates, gold's recent behavior seems to be sending a few mixed signals. But you and I, being the savvy investors we are, know that every signal is an opportunity in disguise. The SPDR Gold Trust, the world's heavyweight champion in terms of gold-backed exchange-traded funds, reported a slight decline in holdings. While some may view this as a sign of waning demand for our beloved metal, I prefer to see it as a market recalibration. You know how it is, every market has its ebb and flow, its rhythm. It's the dance of supply and demand. Now, speaking of rhythm, there's been quite a bit of chatter around the stronger US dollar lately. Boosted by the inflation data, it's been making gold a tad more expensive for those holding other currencies. But here's the thing, it's not all doom and gloom. With the CPI data falling in line with expectations, it suggests that the Federal Open Market Committee might keep the rates steady, offering a silver, or should I say gold, lining and a temporary support level for our precious metal. See, that's the beauty of gold. It has this innate ability to adapt and find its footing, even when the dance floor gets a little slippery. And as for us, our job is to stay attuned to its rhythm, understand its moves, and dance along. Alright, my fellow enthusiasts, we're nearing the end of our golden journey today, but hold on to your hats, there's more coming your way. Hey there, fellow enthusiasts, have you ever pondered why, when the talk shifts to interest rates, every gold and silver investor suddenly leans in a bit closer? Well, it's because interest rates are like the puppeteer pulling the strings of the precious metals market. So let's break down this performance together. Right now, the whispers in the financial corridors are all about the Federal Reserve and its rate game plan. With the US inflation data hinting at a pause from the Fed, many investors are on the edge of their seats. Here's where it gets really juicy. Market sentiment suggests a strong 60% chance that the Fed might maintain the interest rates in the upcoming meeting, with possibly another pause in November. But why does this matter for gold, you ask? Higher interest rates tend to amp up the yields on U.S. Treasury bonds. And when that happens, a portion of the crowd starts gravitating towards these bonds, momentarily letting go of non-interest-bearing assets like our beloved gold. Essentially, as these rates rise, some folks get more intrigued by the opportunity cost of holding gold in an environment where interest is climbing. Yeah, I'd like to sprinkle a dash of optimism here. Every time the rates shift, it doesn't just usher in challenges but opportunities too. For the astute investor, it's all about reading between the lines, understanding the broader implications, and making those well-informed decisions. After all, gold and silver have stood the test of time and always find a way to shimmer, regardless of the rate environment. We're almost at the grand finale of our golden narrative today, but before we wrap up, there's one last gem of information I want to share with you, so keep those ears perked. Well, my dear friend, they say all that glitters is not gold, but when we talk about our favorite precious metal, it certainly does light up our discussions, doesn't it? As we peek into the horizon, there's a palpable buzz in the market, and trust me, it's worth listening to. Investors worldwide, just like you and me, are eagerly waiting for some key data points. On the cards are the US August producer prices and retail sales data. Add to that the European Central Bank's rate hike decision, all leading up to the much-anticipated Fed's policy decision on September 20. Yes, the dance floor for gold is getting lively, and every move counts. Now you might ask, what's the technical picture looking like? Spot gold at the time of our chat stands at a commendable $19.0817, just shy of its recent $19.0951. It's dancing around the 204H moving average, hinting at bearish sentiments. But hey, every cloud has a silver lining. While the market sentiment currently leans towards the bearish side, there's major support between $1885.79 and $1893.70, a safe zone if you will. As for the resistance, it's playing between $1946.99 to $1954.88. The 54H, poised across the bearish side of the 204H moving averages, suggests a bit of short-term weakness. But here's my nugget of wisdom. In the world of gold and silver, short-term hiccups are just that, temporary. Our focus should remain on the bigger picture, understanding the underlying dynamics and keeping faith in the enduring value of these precious metals. I can't stress this enough, the story of gold is one of resilience, longevity, and timeless value. So, as we wrap up our golden discussion for the day on Silver News Daily, always remember every twist and turn in this journey is a chance to learn, grow, and shine bright.